can get it if you really want. You can get it if you really want. You can get it if you really want.
Hi, I'm with Robin Pilley again, and today we're talking about building a buy-to-let portfolio. Now, Robin, you've built a very different type of buy-to-let portfolio than most people in that it's attracting massive yields. You've focused on houses in multiple occupation, and you've actually built the complete infrastructure around that so you can offer it to other clients. And I believe you get a lot of business through recommendations from mortgage brokers, accountants and other professionals.
That's right. I mean, it happened really by default because we started off just sourcing properties for ourselves, looking for long-term growth, looking for pension. But the thing we really concentrated on was the high yielding cash flowing properties.
And they're getting sort of 10-15% as we've talked in previous videos.
Exactly, and it was really our first mortgage broker that we started to use when he said, Robin, you're buying another property. And I actually explained what we were doing and the rents that we were getting. He said, you've got a model there that you're getting about 12 to 15% return on investment. He said, I've got some investors who'd be so interested in what you're doing. Could I make a presentation to one of his clients?
It's so much better than you can get in a bank account, isn't it?
Well, that's right. I mean, obviously, at that time, the climate was slightly different. But even then, the returns we were getting couldn't be matched in a bank. I mean, now it's like chalk and cheese, really, what we're offering compared to a bank. Because, I mean, I think people are getting 2 or 3% in building societies. So our model has become more sought after. But as the climate's kind of changed quite favourably to ourselves.
And you were telling me earlier off camera that the typical type of person that's coming to you now would have about £100,000 in savings that was getting eroded through high inflation, low interest rates, and they don't want to necessarily speculate on the stock market or investments around Forex, gold, those types of things. They don't really trust pensions anymore and therefore looked at the long-term nature of property.
Yeah, that's right. I mean, really, I think we are attracting two type of clients. The first is having maybe £30,000 to £100,000, and he's just really looking to get that money working for him, getting his return. He's probably got it in a building society where he hasn't got much money. He's seen the stock market be so volatile after the last year, so he's losing faith in that. With all the changes in pension legislation, and obviously that's reliant a lot on the stock market as well, with volatility not only in this country but all around the world. He's coming back and thinking property may be something that he'd be very interested in.
So can you just talk me through, Robin? If obviously you've got to start with one.
Yeah.
So buying the first property, just talk me through the basic numbers. So let's say I've got £100,000. Do I just go and spend £100,000 cash on one property, or
no? I mean,
are you advising your clients?
Well, you want to leverage your money so that you could get about 3 properties for that type of investment.
So typically a property like you're doing, if they were to copy your model exactly, what sort of money would they pay for the property?
We're sourcing 3 to 4 bed properties between 85,000 and 125,000.
So if we say 100,000, just to easy numbers. And deposits, what would you put in, 20, 30,000?
Yeah, I mean, you can put in, the mortgage lenders are having much more of an appetite to lend over the last few months, and the deals are getting better and better. Deposit requirements are getting more competitive as well. But to get the really good rates, you need a 20 to 30% deposit to put down.
Okay, so I bought a property for £100,000, paid my 30,000 deposit. What else do I need to spend on the property before I can make the same sort of returns that you're making?
Right. If you want to do an HMO, then you have to do the firework.
This is the house in multiple occupation, where effectively you're renting out bedrooms, and we talked earlier about sort of £75 per room. So.
That's right. Yeah.
Okay.
But again, it's something that you there's no point compromising on, because you want to sleep at night. So we always make sure the council come round, they set the requirements. Obviously, because we're sourcing the same type of properties, we pretty much know what needs to be done. But every time the council come round, there might be some slight adjustments into what they require to be done. then we give a fixed quotation, which is normally between £5,000 and £7,000. But it's basically putting in integrated fire alarm, putting in the
fire doors,
fire doors,
yeah.
exactly.
Fire extinguishers.
You don't always need fire extinguishers as long as you've got the integrated fire alarm. We've now got that. We're really condensing it. We've actually got a maintenance team full time now, 2 vans, and they've obviously done it quite a few times. So we've become quite efficient at making sure there's no point exceeding what the council, what they want. You want it just precise to what they're saying.
To buy one, it's going to cost me, let's say, £37,000 of my own money, and then
Right.
I'm going to borrow the rest on a buy-to-let mortgage. So if we just take a simple one, we've got
Yeah.
4 rooms, £75 a month per room, per week.
Yeah,
per room.
£75
So
per week per room.
£300 a week, call
Yeah.
it £1,200 a month.
Yeah.
Obviously, I've got to pay the mortgage out of that. What are the costs have I got to pay?
Well, you've got if you're doing an HMO, you have to pay the council tax as the landlord because the council can't put it on the tenants because obviously they've got more than one tenant in the property. So you need to deduct that. In our area, it's about £100 for the properties that we're sourcing.
Okay.
You've got buildings insurance. Make sure you've got the right cover. Another thing that we recommend: malicious damage, accidental damage, and DHS cover.
And of course, make sure you get your landlord's liability insurance in there as well.
Yeah, your gas safety certificate, etc.
And that's something that you can organise.
Yeah, we can all. I mean, we've got providers we can recommend. Obviously, people are welcome to get their own quotations, but we work quite well with them. We've got some good strategic alliances. So they are the fixed costs that you're going to have. Obviously, we charge a management fee.
So by the time you sort of boil all that down, out of your £1,200 a month, and you've taken off all of those costs, your mortgage, which presumably you would pay just the interest on.
Yeah, that's right.
What would that leave you per month?
You should be cash flowing about at least £600 to £700 a month.
Okay. So if we say 600, that's 7,200 a year of positive cash flow.
Yeah.
Based on an investment of £37,000. I mean, you're never going to achieve that.
No,
in
I mean,
society.
we can offer, examples, and we've got testimonials, but quite often our landlords can end up with £10,000. That's the kind of benchmark that we're looking to produce at the end when they do their year end. Then you've got the problem of that you've made substantial profit. So we recommend that you are entitled to claim back capital allowances on HMOs, which a lot of people are not aware of.
Yeah.
You want to obey the law again, you want to do everything properly, but you don't want to give the taxman more than you need to.
Absolutely.
So there's ways you can minimise your tax liability, not avoid it, but minimise it, and there's quite good strategies that we can recommend to help you with that. And the reason you want to protect your cash flow and end up with a nice balance at the end of the year is because it helps you grow your portfolio a lot quicker, and you become self-funding.
So in today's interest rate environment, you can get 7,200 a year return on your 37,000 investment. So if you've got 100,000, obviously you triple that. So 21,000 a year off 100,000 investment. That's a huge return. And of course, you've got lots of margin for error built in there. So if interest rates go back to 4 or 5% over the years, you're still going to be able to afford the mortgages and all your costs, aren't you?
Yeah, and the other thing is, using that strategy, obviously I've used it myself, if you like, I've experimented on myself, is that you don't need as many properties as maybe what you believe.
Yes.
The less properties you have producing the cash flow you want to
Less
fund your
hassle.
lifestyle. Exactly. It works very, very well, and it also means you can quickly get to the amount of cash flow you need to fund your lifestyle. And that is what we try to recommend and work with.
Now you're only
investors.
looking to work with people who are literally, they have money to invest. You don't do these no money down type schemes.
No, I mean we've never done, and we've never actually recommended them. I mean, in the last few years, we're fighting a bit against the tide because everybody seemed to be going around networking events and coming back to us saying, "Oh, I've got a credit card, I've got £1, I want 20 properties, and I want to be a millionaire in 3 months."
Yeah.
And it was very tempting, to get sucked into that type of world. I think
But it's not the way you've made.
No,
you're
count-
financially independent, but you haven't done it by
No.
these crazy get rich quick schemes. Have you?
No, I mean, I think because I started and I'd never been to a networking event in my life, I was just believing that property was a good long-term investment and I want as much cash flow as I can get. Because I actually wanted to leave what I was doing at the time. I was in a retail business and I wanted to get out. The internet hit us quite hard. and I could see that we didn't have a long time before we were going to start to, it was going to start to really impact on my lifestyle. So I wanted to use the profit I was making at that time, sell, get out of that business and invest it into property and replace my income.
Okay.
So I was very focused on generating cash flow as quickly as I could. The one thing that let down some of my investments, because I invested all around the UK at the time, was the management side.
Yeah.
You maybe get a good property sourcing deal. We can all go on Rightmove and work out what is a good purchase and what isn't a good purchase. Everything's quite transparent now. What we can't see, no one tells you, is how that property is going to be managed.
Absolutely.
Will it have
and
tenants?
of course it takes a couple of weeks to source one and the rest of your life to manage it.
Exactly, and I think again investors get so het up on what they think is 10% below market value, but really only buy if it's 15% below, etc., etc. One, you've got, well, who's setting that? That's a difficult thing to equate what it was. Two, are you buying in an area that's going to appreciate? Is a lot of investment going in it? Because by the time someone waits to get an extra 10% discount, it might take them 6 months, 8 months. In our area, growth has gone up by 10%. So again, it's another factor that I think landlords or potential investors need to look at. It's not so much the discount. It is you investing in an area that's going to be regenerated. And I mean, for example, in our area, Tesco's went in, a new superstore. We had also a Cine complex, and all of that is telling you, Tesco's don't get things wrong. If they open a store, it's busy. There's people there. You don't go in and think, oh, no one's gone into Tesco's. They've spent a hell of a lot of money to research, and they know that store's going to open. Day one, it's going to produce X amount of money. That's telling you
the right place to build a portfolio.
Exactly. Yeah.
So in terms of building a portfolio, then, which is where we started.
Yeah.
Presumably you just built yours by using this positive cash flow as the next deposit.
That's right, and almost by default we created a letting agency.
I suppose you had to manage your own, so...
Exactly, and then I made that presentation to that first investor, they turned around and said, Robin, believe in what you're saying. I think I came across as very passionate, although I didn't have a lot of brochures or anything behind me. What I did have was a lot of passion.
Yes.
And that is really what they were buying into. And I was basically saying to them, what I've done for myself, I will do for you. And they said, I want 10 properties. And they had £1 million to invest. So that kind of taught me there is a big high demand and a big potential if we can really get this model working, and then I can go out and start to recommend myself to investors,
and
etc.
you are actually in a position now where you can upscale it, you can take on more clients.
Exactly.
Don't ring Robin if you've got no money, it's a complete waste of time.
Yeah,
He's not going to want to talk to you. If you have got money that you want to make a good return on, then I'm sure you'll be delighted to hear from people, which is obviously why we're recording this video.
Exactly. I mean, 5 years, obviously we're now 5 years ahead of when I spoke to that first investor. We've sourced over 100 properties now, and our letting agency manages over 150. And we sort of say it's a letting agency formed by investors for investors.
Absolutely.
And
outstanding success, loads of awards, and that's why I would suggest by all means give Robin a call, or Elaine, who you've seen on previous videos. Details will follow at the end of this short clip. Thank you for joining us for today. I'm Mark Alexander, property118.com, and this is Robin Pilley, CXG Property Services.
Thank you very much. Thank you.